Hello, financial fans. First of all, this is not financial advice. I'm not a financial advisor. I merely tell you what I look for in a stock, show you my style of investing, and if you think it is something that would help you manage your portfolio better, you do whatever you decide is correct. And with that disclaimer in the record books, we will continue with some stocks that I think are worth considering for anyone who either has a portfolio or wants to put a portfolio together, a sample portfolio for funsies, just to watch and see and learn about how to buy and sell stocks. Picked out four different stocks here that seem to pay a pretty healthy dividend. Used to be that at a bank you could get 3% interest on your money, and if you went to a savings and loan you could get 4 or 4.5%, and now you're lucky to get 1.5%. So if you have extra money that's sitting in the bank that you do not need for emergencies in the near future, and you want to put it into some sort of account where you have a dividend that's being paid that's more like 4 or 5%, that could increase your yearly income. Something to think about. And the four stocks to consider: Medical Properties Trust Incorporated, and the closing price on Friday $21.63 per share. And the first column on the left, 2/3 of the way down, 52-week range, you see it was as low as $15.30 and as high as $22.75. So it's nearer to the high than it is to the low. And the average volume, 3.5 million shares trade every day. That's good. And according to the experts who analyze stocks, they consider this to be overvalued. That's down at the bottom of the first column on the left, overvalued. I disagree. I think it might be undervalued, but we shall see as the year goes by. The PE ratio, third item down in the middle column, PE ratio 26.70. That's higher than I would like, but this is a field that is very, very active right now. Medical properties. This is a real estate investment trust that owns hospitals and other medical properties. And their forward dividend and yield, 5.13%, more than 5% while you're holding on to it. And they assume that at the bottom of the middle column, 1-year target estimate $24.17. So that looks like a pretty good stock to keep your eye on and to consider. And we move on to the next stock, which is Rio Tinto Group. That's a mining company, and RIO is the symbol. 2/3 of the way down, the column on the left, 52-week range, $44.11 to $92.85. Quite a swing there for a 1-year period of time, and it's closer to the high than to the low, but it's still got a lot of headroom since it was at $92.85 at one time in the last 52 weeks. The average volume, 2,326,000 shares. And all the way down at the bottom we see overvalued. That's the experts' consideration. So they'll be expecting it to go down in value, maybe. But if we look at the middle column, all the way down at the bottom, 1-year target estimate, $99.13. So they don't really think that it's going to be going down and that it would be overvalued at $79.40. They think it's going to be going up, and this might be one of those stocks that pays a good dividend. In this case, the forward dividend and yield, 5.79%, over 5% again. And while you're holding on to it and making 5.79% just for holding it, it might be a value stock that goes up there and touches the $99 level. We shall see. It looks like something to consider there. Next stock, Stag Industrial Incorporated, STAG is the symbol. This is a REIT that has ownership of warehouses and storage buildings and so on, and what I guess Amazon refers to as fulfillment centers. They used to be called warehouses, but The closing price on Friday, $34.91, and it's moved up in after hours to $34.99. And 52-week range, 2/3 of the way down, column on the left, $22.18 to $34.98. It's very, very close to its high. In fact, it's above its high after hours. And the average volume, a little over 1 million shares trade every day. And down at the bottom of that column on the left, we see the word undervalued. They think this stock is undervalued. And it is in a market which could be picking up steam as COVID regulations gradually ease. Storage and industrial type buildings are going to be needed. And the forward dividend and yield we see is 4.17%. That's a good yield. And their payment each year for one share, $1.45, and they're making only $1.32, so they're paying out more than they're bringing in. But it still looks good enough to consider. One-year target estimate $35.50, so they don't expect it to go too much higher. But if you look on the lower right hand corner, the 3 green dots, they assume if you invest in the short term, the medium term, or the long term, you're going to have positive results. Next stock is energy stock. And a lot of people have written off oil, and they're thinking everything's going to be electric vehicles in the future, but of course that is not quite the case. There will be a great deal of interest in electric vehicles. That's a good market to get into. But oil is not going to go away overnight, and TC Energy Corporation might be a good play for you. TRP is the symbol. And until they have solar-powered airplanes and solar-powered diesel engines on trains and wind-powered whatever, it's going to take a while. In the meantime, oil stocks have been creeping up, and TC Energy Corporation might be something to look at. The closing price, $46.82, and 52-week range, $38.80 to $49.95, so it's got a tiny bit of headroom there. Average volume, 2,693,000 shares, and they consider this stock to be near fair value. The PE ratio 12.44, which is very acceptable. Earnings per share $3.76, and the forward dividend and yield $2.77, and they're getting 5.89%. It's almost 6% on the money, and their earnings more than cover the expenditure for dividends. So this is an interesting stock. And looking all the way down at the bottom of the middle column, one-year target estimate $54.51, so it could be a value play also. Certainly something to consider. TRP, which is TC Energy. And I thank you very much for watching.